Ladies and gentlemen, welcome back to the channel. Tesla stock had a good day today. The stock was up about 2%. Elon Musk says, quote, "Daddy is home." But the big catalyst for this week has always been the Fed meeting tomorrow. And here in this video, we will go over specifically what this Fed meeting could do for Tesla, what Wall Street is saying about how markets could react to this. And I think everyone at this point already knows markets are saying that, or market participants are saying the stocks are probably going to sell off after the first Fed cut. I don't buy into that, but I don't think it's going to be like a parabolic, straight up everything rally, as maybe some people might suggest. So I'm going to give you my view on this, what I think the Fed is going to say. They have a dot plot coming out at 2 p.m. and that is really the big catalyst. Okay, I'm going to give you the blueprint in this video. If the Fed shows this, that's good. If the Fed shows this, that's bad. And that's really what you need to keep in mind, right? Beyond just the market's reaction. Like if the Fed green lights this rally per se with a good dot plot, but stocks sell off, that is an opportunity. If stocks go up on maybe a not so great dot plot, well, that's a bit of a red flag. Potentially. We'll get into it here in this video. Hit that like button as well as subscribe to the channel if you have not done so already. Check out the link down below in the description of this video for the trading community as well. And with that said, let's get into today's episode. Okay, so first things first, Tesla stock did well today. Not a big shocker. We were expecting Tesla to do well. There's been a lot of momentum around the stock, and really once we get above 420, that's where things get pretty explosive to the upside. We've had Bank of America that came out yesterday expecting Tesla to go through like a 75% rally over the next year, which is big from a bank saying that. They think Tesla could be a $700 stock by about mid-year next year, okay? We also think Tesla could double, right, next year. Now, I think we're going to have a very strong end of the year rally, but we're now getting to the point tomorrow when we're going to get the first Fed cut. As I've explained on this channel for a while, or the first Fed cut in a while, I should say. As I've explained on this channel before, the Fed cutting rates is not in and of itself like bullish or bearish typically. Now, yes, if the Fed is cutting rates outside of a recession, that does tend to be a uniformly positive thing for stocks, but it's more so the direction we're going in. Okay, if the Fed is cutting rates because the economy is looking recessionary, that's not great. If the Fed is cutting rates because they're not as worried about inflation, that's good. Maybe the cheat sheet or the blueprint, if you will, to whether or not tomorrow is going to actually be positive or negative. Now, this is not where we're going to talk about the market's reaction, okay? This goes one layer deeper than that, okay? If this happens, it means this. If this happens, it means that, okay? You have to understand, the markets are pricing in about 5 to 6 rate cuts over the next year, okay? The Fed's going to tell you they're data dependent, that, you know, meetings are live and things can change and blah, blah, blah. But what really will determine whether or not this is good or bad is how many cuts is the Fed pricing in, okay? If the Fed is pricing in 5 or 6 cuts, that's a green light, that's good news. I doubt it's going to be more than the markets are pricing in at this point. That would be quite a shocker, and I don't know if that would be a positive. If the Fed's dot plot shows 3 cuts between now and the end of 2026, that's definitely not good. If the dot plot shows 4 to 4.5 cuts, that may be semi-neutral, a little bit on the weaker side or the not as good side. So if we come in, for simpler terms, at 4 rate cuts, that's not the end of the world. That's not as good as expected. And I would believe that stocks would probably react semi-negatively to that, okay? If we come in at 5 cuts, that's probably the best case scenario. That's probably the most likely scenario between 4 and 5 cuts. I think 3 cuts is highly unlikely, and I think the Fed projecting 6 cuts is probably highly unlikely as well. 6 cuts, 7 cuts would probably spook the markets a little bit. Like, why does the Fed think they need to cut so much? Okay, so this normally happens where the markets get a little bit ahead of the Fed. Okay, if the Fed is not so far off from the markets and what we're pricing in, again, around 5 to 6 cuts for the next 12 months, then that's going to be good. So for an example, if we get 4 rate cuts confirmed by the Fed, that's not great. If stocks rally on that, then that's not like a super great sign, okay? If we get 5 to 6 projected cuts and stocks sell off on that, I'm still going to look at that event with the Fed tomorrow as bullish. So that's what really matters. Now, my expectation is kind of interesting, okay? I've been in the markets for a long time. I've followed the Fed for a long time. I've seen many of these Fed events and specific events. And this time around, it seems like people are pretty uniformly negative on the Fed meeting tomorrow. Not in the sense of the Fed's going to project super low cuts, but in the sense of people believe the markets have already priced in the Fed meeting. And that could very well be true. And most people out there believe the first Fed cut is probably going to be a sell the news event. I agree, on paper that makes sense. But when everyone is believing it's going to be a sell the news event, that typically is not what happens. Okay, typically you don't get a sell the news event or a negative reaction based on an event if everyone is already thinking the same way, right? Normally the opposite happens. If everyone's bullish heading into something, normally, you're going to get an opposite reaction. If everyone's bearish, normally you're going to get an opposite reaction. Stocks are going to go up. So it's definitely skewed towards sell the news as far as the sentiment out there, which instinctively makes me believe that stocks could go up. Now, I don't think it's going to be like an everything rally. This is not going to be one of those days where your entire portfolio is green, in my view. But I do think, and I'm expecting a bit of a rotation. I do think maybe real estate companies are going to be up. Maybe small caps, high beta companies, risk on areas, maybe AI stocks like Tesla could do very well. Whereas maybe industrials and mega cap tech and some of your other areas may not do as well. Okay. That's just my thoughts at this point. I obviously could be wrong in that. And you should be prepared for anything to happen tomorrow. It's not clean cut, right? We could get a very good day tomorrow or a very bad day tomorrow. But no matter what the market's reaction is, it really only matters what the dot plot says and how far off it is from the market's expectations. The closer the dot plot is to market's expectations, the better. Okay? The farther off, the worse. Again, if the Fed projects 3 or 4 cuts over the next 12 months and markets are at 5 or 6, then that's going to be a pretty negative event. But if the markets are at 5 or 6 and the Fed is at 4 or 5, that's not terrible. If the Fed comes in at 5 or 6, right in line with expectations, that would be a very positive potential outcome. Okay, so we'll see what happens along those lines. I do think Tesla has a lot of momentum right now to continue to work to the upside. And again, remember, Tesla's a quote unquote auto company. They sell cars. I put that in quotes because, we obviously know that's not true. We know that Tesla is morphing into the biggest AI company in the world as we speak every single day. And there's a lot of upside momentum right now with Tesla. Even Wall Street, big money, has started to get pretty damn bullish on Tesla. And we're sitting right under that 420 level. If we can get above that tomorrow on the first Fed cut and close above 420, that opens the door to easily hitting new all-time highs. That's what Wall Street is saying, and I agree with it.
How he's positioning is Fundstrat Global Advisors Head of Research, Tom Lee. He is, of course, also a CNBC contributor. First off, Tom, I want to mark a milestone because it is now a big anniversary day for Fundstrat.
It is indeed. It's our 11th year since we started Fundstrat, which was September 15th, 2014.
Blink of an eye.
It's a blink of an eye, yes, because this is still mid-cycle for the bull market as well.
All right, so since you said mid-cycle for the bull market, let's get right into the record highs that we are seeing. If it's mid-cycle, that kind of implies maybe third, fourth inning, maybe fifth at the latest. Is that how you see things for this rally?
Yeah, I mean, I think some parts are later cycle, like part of the Mag 7 trade. But I do think AI still has many years to just propel earnings surprise and innovation and economic growth. So I don't think it's late. Like, it's too late. It's not too late to buy the Mag 7. But I think the next leg of this is really the Fed cutting, helps the ISM get back above 50, brings down mortgage rates, so it's a cyclical broadening trade. And then I think, financials I think are still important because I think that they're going to re-rate more like technology stocks. Goldman and JP Morgan are basically technology companies now. And as they embrace the blockchain, they're going to become more streamlined and less employee dependent, much more AI driven. So I think there's a lot to look forward to.
Now, if that is the case, you mentioned that it's because of a possible rate move lower and a trajectory of lower interest rates. Just how critical will it be to this market to have those lower interest rates? And do you think that there is a post-Fed playbook for what those companies are going to be?
Yes, I think it's really important for CEOs to be confident the Fed is cutting because we know the labor market has slowed, maybe even wobbling. And that's because businesses are cautious, and the ISM reflects it. It's been 31 months below 50. The Fed can actually re-inject confidence by saying we're back into an easing cycle. That helps businesses get confident and expand again. So there's a lot of legs to this if the Fed cuts, and I think it'll be a real improvement in liquidity.
You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top three together about where you think the most activity or juice could come from if the Fed were to embark on this path. I think of maybe home builders. I think of other parts of the market, maybe technology based on valuations. But in your mind, what are the places that are going to reap the most benefit from that?
Yeah, so I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is NASDAQ 100. So I think that's why the Mag 7 and the AI trade gets a lot of lift off. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum. And seasonally strong, I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials. But really, the first two might be the standout trades.
All right. Because you mentioned the crypto side of things, you're actively involved now. It's not just a thing that you're doing on the side. You are very much engaged in the business of crypto. You govern, you oversee crypto assets now. If we were to say Ethereum, Bitcoin, we try to bucket them into risk-averse assets or risk-on type assets.
Yeah.
Is it fair to look at them that way? We used to compare them correlation-wise to the NASDAQ 100. Is that the fair assessment for how these things trade in the coming months?
Yes. Bitcoin is particularly monetary policy liquidity sensitive. Ethereum has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation. Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum.
So, yeah, Tom Lee said a lot there. He specifically references AI stocks that could get quite a lift from the Fed cutting rates. I agree with that, and I do think the tide has really come to turn for Tesla. But, the day of the Fed cutting rates the first time, like, if it's negative tomorrow when the Fed cuts rates, like, just markets sell off on that for whatever reason, I'm not expecting that to last. I again think the most likely scenario here is that we get a Fed that's pretty in line with the markets. Whether we sell off or rally, I don't think it matters too much. Obviously, a rally would be better than a sell-off, but if we do sell off a little bit, or even see a rotation, I do think it sets the stage for a very strong end of the year rally for this market. As I've talked about before, October, November, December, it's going to be a very strong period for stocks, and 2026. I think 2026 is shaping up to be one of the best years we've seen in a very long time. And the Fed cutting rates is, a part of that thesis that should be coming true tomorrow. In the meantime, ladies and gentlemen, hit that like button and subscribe to the channel. Let me know your thoughts on this down below in the comment section. And let me know where Tesla stock could go. Again, if we do see a rotation, we get above 420. That is a big level that could lead us to new all-time highs. A lot of Wall Street is talking about new all-time highs on Tesla. And that's where the trade even gets crazier, because that's probably when a lot of algorithms, a lot of firms start to chase a short-term rally in Tesla stock. If you guys want to come join the trading community, check out that link down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.